Share. Okay. This one out of the way. Let's go to a different symbols, otherwise I have to delete all those drawings. Okay, the Fibonacci structure. Dealing range high, dealing range low. We have a buy-sell zones. You can delete them when they're mitigated. We have a period high-low. We can extend the high-low. We can show fibs on the high-low. We can extend the fibs. Then we have a candle color for the fair value gap, and we can show the price legs. And we have dividers. Okay, time dividers. That's something new. So let's go over it, what it all is. But you can do, if you mark off structure according to the training, you will get this structure. If you don't, you did something wrong. But the benefit of drawing the structure by hand is, well, I don't know if you guys experience it that way, but if I draw structure by hand, I learn a lot about how the market makers manipulate price. And maybe it is because I look at the market and the development of price and the swing highs and the swing lows they take. When I mark off these structures, that's why I taught you guys to do it by hand. You have an indicator that indicates a valid POI zone when it gets broken. That's easy or easier for you then to work a little bit faster. But the problem with this indicator, and actually it's not a problem, actually it's very convenient, but it's only convenient if you know what you're doing. And that means that you have to be drawing this stuff by hand a lot, because that means that you know what you're doing. And then if you throw something like this on your chart, which has a lot of features, it has the dealing range highs, the dealing range lows, the price legs. You can enter or can view the retrace levels from the moves, but you can also see the POI levels, or the Fibonacci levels from the entire period. So that's our premium discount. And this is not something that's, well, it is mentioned in the course, but not with the explanation of the structure. But this is the look back. So this is the highest high in your look back period, but that is something that is, how do you say that? A variable, because we are now looking at the 15-minute, and the look back period for the 15-minute is 3 to 5 days. So the indicator is going to look for the last 3 to 5 days and find the high and the low, and that way we determine our premium and discount levels. But if we go, well, if you look, the high is, well, let's just draw it, then it's a little bit easier. So this is our high, and this is our period low. No, period low is over here. Not sure if that's correct, but it must be, otherwise the indicator wouldn't plot it. Oh, I know it. 15 minutes. I have 7 days because I want to account for the weekend. Yeah, okay. So this is the high and this is the low. But if we go to the 1 hour, we get a whole different new structure, and that should not be very surprising to you if you work with this structure. But now we have different period high and low, because this was our period high and period low for the M15, and for the H1 this is our period high. and this is our period low. So on the H1 we are in a very bad level, which is the consequent encroachment, whatever you want to call it, the 50%. Do I mark this with numbers? No. Okay, but if you put on the extend the fibs, then you see it with the background. And if you do not take the background, you know these levels. This is the 50%. This is the 59. This is the 79. And we do not mark off the 88.6. And that way you can see by flipping through the several time frames, you know that this is our active 4-hour leg, and we are in a discount because the H4 levels are, this was the H1 high, H1 low, this is the H4 high, H4 low. So now if you just every time, I don't know actually if I did the daily, because we don't work a very lot with the daily. No, I did not take the daily into account. Okay. Another feature is if you are on the 4-hour, and well, it takes quite some time before price reaches these levels. You would agree with me, I guess. So it's not very handy if we plot all this information. But if you put this settings, this field to 0, it will automatically delete all drawings after the period that it is not more relevant in relationship to the time frame. But let's say you are on the H4 and you're not interested in all this stuff. You can just say, I want to see the last week, for instance. I don't know if that's very handy with the 4, the last 3 weeks. 28 days, then it will remove plots after 28 days. So now maybe this is a little bit more easier on the eyes, let's say it like that. Or if you want to see the last 40 days, yeah, now we have at least our Fibonacci levels in place. And the period high and period low stays the same. It just doesn't plot all the information over here. So furthermore, we have these time dividers. Where is it? Time dividers. On the H4 we do not do very much with it, but as soon as we go to the H1, if we switch on the time dividers, this will look familiar like in quarterly strategy. This is all meant for you to look at price in a more structured way. Because if you look at this, and let's clean it up a bit by H1, only the last 30 days or 20 days. That's what ICT always says, huh? The last 20 days. What we see is we have open liquidity here, or this is at least is our buy zone. If we have open liquidity, I don't know. At least we have lows. If we have untouched order blocks or POI zones, I don't know. I guess maybe this one. We have a huge gap here. No idea what that is. Oh, this is Wanda. Wanda has gaps. Okay, well, never mind. That's for another day. Every time we start a period, what is of interest to us is the period, and this is the whole period between blue lines, the 50%. So we have a 50% level of the period plotted, but also of the price lag. And as long as it's not traded to, we also have, of course, the buy and sell side. I don't know, is that correct? No, that's what we have to do ourselves, but that's what we know. So here we have, I believe, the 50% of the ranges, no, of the leg. Okay. Where is it? Here. Yeah, we have the 50% of the leg. So this leg down here has 50% value over here. And if we break up, but we have not broken up, so what we do is, that's what you learned in the course, and maybe I have to add that, we follow price with a fib, just as long as we break. Well, now we break, and now he plots the fib. So let's remove this one. So now we have an idea, okay, price could probably trade at least back to this level, and to open zones into the buy zone here. And well, we just know that if we enter here, we can look for a reversal to go higher, and if we do not see a reversal, we can even trade lower to this zone. But that's how you approach a price, and you can do this every day, and that's what the strategy teaches you, that before you start your trading session, you're going to look at your liquidity profile. Well, this is part of your liquidity profile. You can combine it with the POI zones. So if you only want to see structure here, DRI, no buy sign, so these no price legs. Well, maybe the price legs are okay. So now it's a little bit more clear. We first traded down, we had a retrace, then we broke a structure down again, and now we have a retrace. And after a retrace, well, if we are in a downtrend, we expect price to trade below this low. If it doesn't, and it trades above this high, then we have a new dealing range, and then we're going to expect prices, higher prices. But for now, that's why these price legs are gray. I consider the first move up as a retrace. As soon as we have a retrace and we fail to make a lower low, and we do break the internal high here, then I look for higher prices. I don't know if I taught that in the course, but make a note of that if I didn't. Why is this? Oh, okay. We have, if we are on the hourly, we want to see the daily POIs. Okay. So if you combine it with the POI, the liquidity seeker of Jan, which Jan coded, we see a large POI zone up here, and on the downside, let's move everything out of the way. We have probably all-time low, in the sense of that the data is not, the look-back period is not big enough, and I believe we can put something in here, yeah, but that's going to take a lot of time to calculate. Now we can look back further if there is, yeah, and there we are. Here are the liquidity levels on the downside. Okay, and we traded exactly to the 50% and now moved up. Oh. And we were in premium and we did trade into a, well, maybe we have to go back here. We trade back, or we trade into a POI zone. Well, you do the same like I was just showing on the indicator. We look for a reversal pattern, and we can refine these things. Like, okay, do we have a POI zone? Yes, we have an hourly POI zone here. So if we look for an hourly, what do we want to see? If this is the POI zone, then we want to see on the 5-minute a reversal pattern. Okay. Well, you see it builds the structure on the 5-minute also. We took out a high. This is the swing low that took out this swing high, which makes this a change in the state of delivery, and we could check for a Fibonacci retrace to the 59% for an entry. No idea what time this is. Okay, this is in the afternoon, so there we are. And according to our plan, well, we have to move, of course, our Fibonacci. We had an entry here, and on the 5-minute you can even look for a refinement. So as soon as you see a shift, where are we? There we have a shift, and we could sell. Put our stop loss over here, and move our stop loss to break even as soon as we take out the low here. There. You see, trading isn't that hard as long as you know what you're doing. Move stop loss, and our ultimate would be taking out this and equal lows. Well, okay, let's see if we can take the 65, which is over here. A smart guy would have taken a little partial somewhere along the line. I don't know what time are we. Okay, this was already the end of New York. London close. So it would probably would have been very wise as soon as we trade above, and I have never taught this before, but so make notes if you are anxious if price goes lower to your target or not. What you do is, as soon as we close above a previous candle, if we are in a move like this and you're not sure if we're going to reach target, especially since we are now 15 minutes before the close of London close, you just shut down your trade or take the majority off as soon as we close above a previous candle high. Well, we do not do this. Here we do not do this. Here we do not do this. This candle here at the close of this candle, you just kill the trade. But we didn't. We were too anxious to get our 3R. And actually, we could have done something with our stop loss. Why? Well, because all these zones, if I remove everything, all these zones here were all mitigated. There's nothing unmitigated here except for this one. So we could have, put our stop loss not above this one here, but above this high here. Since everything up here is mitigated, so it has no use to put it here, because if they're gonna go up here, they're gonna take out this high also. So that is of no use. So we probably would have had more than 3R trade, but this is not part of the strategy. This is well, extensive training. Let's call it like that. Where did we went in? This candle. This candle. Okay, and this is where our stop loss could have been. Way too big to my taste for. Oh no, it was based off the 1 hour. No, that's okay. Oh, this is a buy. That's not the correct one. We need a sell, and it was on this candle, and this was our stop loss. 12 pips. That's quite a lot. So you need 36 for a 3R trade, and there we are. Okay, so you see this was a 3R trade after all, and only the break even was 2R already. So very nice trade, and you saw how it came about. It's really yeah, 1 and 1 is 2. It was based off the 1 hour. Because we were in a premium, where is it? Here, and we had the Fibonacci structure. So we were in a premium, we entered a higher time frame POI zone, so we want to look for a sell. Well, we did. I don't know how price further reacts, probably going down, but this is, yeah, here we are. But this is in the evening, and I don't trade in evenings. So it's even worse. This is midnight. But, well, after all, we did trade to our target of 65 and way beyond that even. Well, are we getting anywhere with our alerts, or are we just lingering along? Whoa. Did anybody hear an alert? Because I sure didn't. But look what happened here. We marked off 2 levels. We should have had 2 alerts, but oh, we did have 2 alerts. Okay, we enter a bullish breaker. That was the first alert. And then there was an alert. We entered a bearish POI zone. God damn, that's just the 2 levels we marked off. I think he must be lucky, this guy. I can imagine that he actually knew they were gonna trade there. Well, I didn't know. All I know is I have an indicator, And that says if I put this on 50-minute, it's gonna show me the POI zones. And that's all I marked up. And this one I did by hand, okay, because the markers, the breakers, it gets too messy. If we plot all the breakers, it gets way too messy. So you have to do that by hand. But it's all the same. Now we didn't have an entry here, to be honest, but maybe with our new indicator, let's check. Follow daily structure. Okay. Now I have to put this one over here and no. And that's weird because, oh no, that's not weird. This level was not broken, at least not by a valid break. So the indicator only gives an alert when we have a valid break of this level. We now have. Okay, so now the indicator gives us a buy level, but this buy level is not valid yet. Why not? Because we had a sell level over here, and our stop loss was over here. So we're actually still looking for sells. Unless we close above this level, and then a buy becomes valid. But you also see that the label, the buy label, is gone again, and that has to do with you have to wait for a candle close. And as long as you do not have a candle close, everything on the chart is not valid. Yeah, stuff over here, but the buy signal it gave was not valid because that candle was still growing and it didn't close. Oh man. Okay, London close has started. Let's see, this was 15 minutes 4. Okay. I don't know if this is a big move, but it was an aggressive move, that's for sure. Price range. Well, that was 24 pips. That's quite significant. Change in state of delivery. Okay, this is another indicator I'm working on. Then we would have had a buy entry at this moment. Where is it? Buy. Long position. Yeah, that's the fair value gap confirmed. You put it over here and then 2R. Well, maybe. And one more, then we have 2R. Yeah, 2R, valid trade. Okay, this is what I said. You have to, you cannot mix everything if you do not know what you're doing. This is a total different way of looking at structure. What I do here is, this is a change in state of delivery. And if I do that with a fair value gap, then, well, we only know confirmed fair value gap once this candle closes. So the next candle open, we can enter the trade. And we put our stop loss below the candle that the low of the fair value gap. Well, a fair value gap is a 3-pattern candle, like you know, according to the definitions. And this is the low, and this is the high of that 3-pattern. And we enter as soon as we have a confirmation of the fair value gap that traded through this swing low. Because this swing high. What's so important about this swing high? Well, the indicator draws it purple for a reason, because this was our last swing low, or at least our lowest swing low in the move down, and it was taken out by that swing high. So as soon as this swing high takes out with a valid break this swing high, then the fair value gap that is created, then we're going to trade. You can wait till it price gets here, but then you're going to miss entries. But this is also a valid setup, and then we can go for 3R. But in this case, price went way too fast to enter. So there's two ways you can enter this strategy. That is the moment the fair value gap is confirmed, you enter on the first candle and put your stop loss below. And the second one is you wait for a retrace to the fair value gap, and then you put your stop loss on the low, the first swing low preceding the fair value gap. And then you go for 3R. Where is it? 3R. 3R. It's weird that we did not get the alerts. I'll check my email, because they email them too. Okay, I was just talking too much, probably because I had 2 emails. Well, enough stuff to go over again, and I will make the indicators available later on. But first, what we're gonna do, I don't know who's still here. Wonder and Venom. We're gonna go over the real market structure course first. And if it's okay, you should have a tab, a category in the left, in the trader body back office, which says, let's say, see what it really says. Real market structure. There's 4 lessons there. Go over them. We will go over them next week. And next week there will be new lessons added every time. So to make sure you really understand the real market structure, you can go and practice it and take the lessons already. And then we're just gonna go over it again beginning next week. Well, that's it for today. I think I've said enough. I told you guys that, where is it? This one. We are still bearish. Why are we still bearish? Well, we did not take out this high over here. This blue line had to be closed above to make sure that our shorts are out of the question, but they didn't. So you could enter on the retrace to the fair value gap here, but that is a risky entry because we have no confirmation yet. We do in the, oh no, that is something I drew. No. In the change of delivery, yes, okay. We broke this one. Okay, well, now it could be a sensible entry if we make sure we line it up Let's look where the fair value gap is. Okay, it's at least below the 50%. Did I draw? Oh, I drew that one. Okay. Well, okay, let's stick around a little bit longer. This is okay. Here we have the high taken. Here we have the high taken. I'm looking at the quarters now, guys. So here we took the low of this one. So it could make sense that we go for the high. So it could be a valid entry at the touch of this fair value gap. And then this. So what did I draw your attention to? This order block here. That's exactly what they traded, but that still means that there is this one open, and if you want to make sure this, well, this is traded, okay, this is mitigated. The only thing that's open is this one here. So there's also the possibility, because you have to learn not only to look, okay, I'm gonna go long, I see longs, okay, but are there possible shorts too? Yes, there are, and as long as we do not close above this line, there's still a possibility that we go lower first. But then again, you have to enter the market every once in a while, and all you can do is, okay, add up confluences, and if you got enough confluences, then it's worth to take the risk. And then again, you cannot win all the trades, and you don't have to. If you have a nice full profit 3-hour trade every now and then, well, you can make a lot of messed up or failed setups, as long as you do not stupid stuff like, but I'm sure I'm right, I'm going to move my stop loss a little bit more and a little bit more, and it has to go up, and then all of a sudden you're 3-hour down instead of 3-hour up. So that's what we do not do. Okay, here we have a suppose you were, and it's all a matter of interpreting price. If you are still bearish, like I said, if we do not close above this line, we are still bearish. Then our change in state of delivery, meanwhile, is bearish also. And we have, why is that? Well, because this low, well, actually this low, or is this higher? Oh, this high is higher, okay. This low, it's the same candle. Well, maybe I have to reprogram that, but never mind. It also took out this one. No, not with a fair value gap. But the next candle did. So this candle high actually is, if you are interested in shorts, this candle high, and it touched it, is an entry then for a short, unless, and you're not really sure, so this would be a nice 2-hour trade to take your profit, because there is a possibility that we will take out this high over here. And that's all based on dividing the market, the price development over the day, into these 4 quadrants, and each quadrant is divided again, or at least every 6-hour period is divided in 3-hour, and the 3-hour is divided in 2. So you get blocks of 90 minutes. Let's see if price wants to trade into this fair value gap. Then I'll show you one more trick on how to enter. Well, I believe I already showed it to you, but it's actually the same trick as getting out of a trade. You want to see a closed button candle below, but then on a lower time frame than this. If we enter this area here, because I believe this is equal highs. Let's see. No, it's not even equal highs. This one is lower even, so I want to see this one taken out. You see, trading is a game of patience. You really have to work and wait and check time every once in a while, because what time is it? Okay, 20 minutes into New York or London close. I mean, let's get rid of this buy limit, because that was from, I have no idea where this was from. Why did we buy this one? Oh, over here. And I was explaining you should not move your stop loss. I was okay. Got me a little bit confused there. So we have this as a sell option and we have this as a long option. That's what I mean with don't get married to your idea. Too convinced, and let price tell you what to do. And if you're convinced that we're going long, then it would be probably a good idea to first go short to get some more liquidity. And let's see what the 5 minutes has to say about this. Okay. Okay. What do we see here? On the 5 minute, we have too much on the chart, but that's why you need a fixed number of time frames, because otherwise you're gonna go mad. But we have a change in state of delivery here, and we trade it to this candle. So the change in state of delivery was confirmed at the open of this candle, or rather at the close of this candle. So you could have traded, if you would have done it by the one long position I explained before, but I don't do this on the 5 minute because I don't have the patience to sit this out. But this could be a valid entry, and you have to, well, you have to go for 2R, which is 40 pips. I don't see at the end of a session a 40 pip run, but well, who am I? But I don't see it, so I won't trade it this setup. The next setup, which I explained before on the 1 minute, was if we trade back to the fair value gap, well, in this case, it's the bottom of the first fair value gap, because there's a fair value gap here also. But actually, I want you to trade to this one, but that one didn't make it. And then the swing low, and then go for 3R. Well, you see that the target is the same, almost the same, but the entry is way tighter. Let's put this one on that one. Yeah, okay. And this is on the swing low. That's still 13 pips. That's way too much for my taste. And what did we take out? We took that one out here. And that was that one. So, well, we are still bullish. Depending on what we do with the breaker here. This was a breaker, traded to the top, and then closed above. Now trade to the bottom, and now we can expect price to seek a higher liquidity, taken out this high. But again, with only 30 minutes to go in the session, I'm not really interested in taking this, since, well, we took some trades already today. But this is how you can build an idea for a setup. And if you want a confirmation, then you look for the price development on the lower time frame, within the back of your head what just happened, which is, okay, we traded to a breaker, and now we did not reject the breaker because we traded above and now took the liquidity at the bottom. So it is to expect that we get higher prices. But if we get higher prices immediately, like we do this and this and this and now break, or that we, and here's our sell setup, or we do this and then go higher. So in both ways, there is a potential setup present for actually, well, an interesting amount, because we only trade 2 or 3R. So there is a potential 3R trade here, but that's purely based on the 1 minute and the fact that we go for more liquidity to go take price higher. And then we would have, are we there yet? Nope. Still not there. Trading can really be a tease, huh? Since we've been waiting so long now, let's just assume they're going for more liquidity down here. But then I want a fast move inside there and then immediately down again. And then I will wait for, if it does that, I will wait for a candle close below the previous candle low. And it has to occur in, well, let's say 3-4 minutes. Where was our change state of delivery? This was our other setup. We have the 50% of, where is it? This one, this one. Yeah, that's the same level. So this is a very sensitive level over here. It's the 50% of the liquidity void. It's the top of the fair value gap, and it is the level where we broke or changed the state of delivery. Well, they take their time. I'm gonna mute you guys. I'm in desperate need of a cup of coffee. Boom, 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 boom. Oh, in the recording there is I recorded it in trading view. I'll see if I can upload it to YouTube. Almost there. Okay, well, they keep us in suspense. Why they do not want to trade to this level, I don't know, but they don't. It's the top of the breaker. Well, did Bitcoin reach 100,000? Yeah, it did. Wow. Well, that's when ICT is gonna delete all his videos. At least that's what the sucker said. But the sucker said so much. There's a lot of talk nowadays. ICT. Let's hope so, Venom. Maybe people can get a little bit less disoriented then. But he probably won't because I have not. Who's ICT? I have not seen him make or keep his word on one promise lately. So I have no idea what wrong with the man's brain, but there's some serious serious issues. Well, this is taking me too long, guys. I'd rather go work on the indicators. So, well, I drew out what I thought was were probabilities. I'll shift them a little bit. So there was a possibility that if we trade above this high here, then I will see a swift move down, and then after a close of below a candle low, we trade it down to somewhere over here because this down here is a very sensitive level, and we wait for the same to happen. Uh, a break above a candle high in this instance, and then to take price higher, and then probably up here. But it is only 20 minutes till it's New York lunch, so I'm done for the day. Thank you for listening. Okay, yeah. Well, I did record it, Wonder, but I recorded it in Trading View, so I have no idea what it's gonna be, but I'll upload it to YouTube, and then I'll make it the link available. Mm-hmm.